Hi everyone, I'm Realtor Josh Kepke with McDonald Realty in Vancouver Real Estate today, and I'm so excited because today I have my mortgage broker, Parm Rattan, joining us. He is from Dominion Lending, and he is here to tell us really what's the difference between going to a traditional bank to get a mortgage application done and working with a mortgage broker like himself. As a lifelong resident, I am genuinely thankful to have the opportunity to live and work in this one-of-a-kind city. Picturesque mountains to the north and stunning ocean to the south with endless world-class real estate in between. Vancouver, British Columbia in Canada is truly a city where you can live who you are. Parm, welcome. Thanks for taking the time. It's good to see you.
Thanks, Josh. Thanks for having me. The biggest difference between a mortgage broker and a bank, I would say, is our best interest is actually in you. Now, when you go to a bank, let's say you go to a TD, for example, or an RBC, the individual there is not a mortgage broker, it's a mortgage advisor, and they're only allowed to kind of present RBC's products to you or TD's products to you. So for us as mortgage brokers, we have access to multiple lenders, TD, Scotia, Coast Capital, and many others. That basically no other advisor has access to, but our best interest is to put the best product or present the best product that is in the best for you and what you're looking for at the end of the day.
So Parm, let me get this straight. When I go into a bank, say I'm going into a TD, I go in and I ask them tell them I want to buy a property and what do I have to do, how much money can I borrow? Does that person's job is to sell me the products that bank has?
Yes.
They're working for the bank?
Yes.
Okay. Does that mean they're kind of not telling me any stuff sometimes?
Well, they may want to not tell you what their competitors are offering, even though they may be offering a better mortgage product or a better rate, because they want you to stay in-house with them. Now for us, we have access to multiple lenders and I do the shopping for you at the end of the day.
Hang on, you said that different products, like isn't it all the same and just about rates with mortgages?
No, it's pretty complex. There's different things that people should worry about.
Fixed and variable, but that's
fixed
about
and variable. There's also collateral charge mortgages.
What does that mean?
Collateral charge mortgages are when basically, if down the road, if you want to get out of your lender and if you want to switch to a different bank, you may have to pay for legal fees again. That's the negative. The positive is that if you want a home equity line of credit, it's just as easy just to go into your local branch and apply for that line of credit. However, if you're a first-time home buyer, you may not see appreciation in your property for quite some time. Let's say 5 years or 7 years. But within that time frame, you may want to move to a different lender because they're offering a better product or a better rate, or their service is not that good with the current lender. So a collateral charge product kind of keeps you with that lender. So that's kind of the negatives of it. So that's something that you may want to consider going forward.
Collateral charge means I'm now stuck with this bank.
You're stuck with the bank because if you switch, you're going to have to pay for legal fees again. Typically on a non-collateral
What's the legal fee look like?
At least $1,200.
$1,200,
yeah.
Okay.
So basically another lawyer, another notary.
Right.
But now when you have a non-collateral charge, the new lender or the new bank will take on your mortgage and actually pay for your legal fees. So that cost of switching your mortgage over will be absolutely free to you.
Because they want your business.
Exactly.
Okay.
Exactly.
Now, I understand that, like me, you've got a license, and we're both licensed through the real estate council, and we're regulated.
Yep.
Is that the same for a bank employee?
Not the same for a bank employee. They actually don't have a mortgage license.
They don't have the license?
They don't have a license. No, they don't need to be licensed.
Okay.
So us as mortgage brokers, we are licensed and we do get audited as well. So
what does that mean for me as the person wanting that mortgage?
That basically means that I am always under scrutiny, I would say. I'm always, all my ducks have to be in a row at all times.
Right.
For example, credit consent, I cannot pull your credit unless I have consent. I've heard stories in the past where clients told me, well, I didn't even authorize that employee to do my credit check, but I still got my credit pulled. If you do that too many times, that can hurt your credit score. So that's something that we make sure, because if I actually end up getting audited and they see that I don't have consent to pull your credit, that could affect what happens to my license at the end of the day.
Okay. So, and you're being licensed, is it fair to say that you've got more training, or is it the same kind of training and the same knowledge?
Well, we do have training, and then every, I think, 2 years we do have to go through another training process and courses. At the end of the day, we're always learning, we're always training, because we have so many lenders and they have so many different products that they constantly are holding workshops, introducing new products, how to get people improved, especially with the new stress test, or not new stress test, but the stress test being involved, as well as different ways to help first-time home buyers or maybe even seniors.
Right. So I'm hearing main differences between mortgage broker and banker are access to multiple lenders, that you've got the license and you're under more scrutiny. So it's in your interest to be a bit more careful with your relationship with that person. Although people tell me all the time they've got great relationship with their banker, which is fine. But you do go through some more hoops and training, essentially. Is there any other differences that we haven't covered?
The biggest thing is that
can you get them a better rate? I guess let's start with that one. Sorry to cut you off.
Yeah, no, it's okay. So
how do you get me a better rate?
So basically, we do have good partnerships with lots of different lenders. We sometimes do have better rates, better mortgage products. We even have cashback offers with some lenders sometimes. I've had situations where clients actually went into a branch. They actually got a certain rate, but on our side, the broker channel, we actually had a better rate, or we had a cashback option, or where the lender pays for your appraisal fees and things like that. Another big difference is that when you're working, let's say you're working 9 to 5 in the evenings, you don't want to go bank to branch or different branches to shop for your mortgage. You rather just have a mortgage broker do that for you. And then when you go to each branch or each bank, you have to get your credit pulled to actually complete your pre-approvals.
Right.
Now, if you go to 5 different branches and your credit gets pulled 5 different times, that could actually hurt your score.
We saw that with somebody I sent to.
Exactly. That happened to a couple of my clients in the past as well. With us, it's one mortgage application, one credit consent, so your credit bureau actually doesn't get affected in any way.
Fantastic. Okay. You had something in there I wanted to touch on. It's slipping my mind now, unfortunately. So, Parm, here's what I really want to know if I'm somebody looking for a mortgage. With the bank, it's an employee of the bank. You don't have an employer. You're like myself, right? Yourself, independent contractor. What's the fee?
There actually are no fees. So basically, no fees. So if you're getting an A mortgage, which means you're getting with the typical financial institution, you have good credit, you have a good down payment, good verifiable income. There's no fees from using a mortgage broker. We get paid by the lender directly. The only times there are fees is, let's say you have bruised or damaged credit. If you're self-employed, you maybe don't claim a lot of your income, so we got to use alternative lenders to get you approved, or maybe even private financing. Then that's where the fees actually come up, and they will be disclosed upfront, so there will be no surprises. Okay,
so no fees for your standard mortgage.
Yes.
And what's the difference between an A and a B, and is there a C for mortgages? You mentioned A. I don't know if everyone knows the difference.
So an A is actually, let's say you're going with your typical TD or Scotia or Coast Capital. They're called A lenders because you're getting the best rates with them, because you have that verifiable income, you have an excellent credit score, your down payment is good. Now the B side, they're called alternative lenders because, I'll give you an example. So self-employed individuals, a lot of them don't like paying any taxes to CRA.
Right.
So what they do is, a lot of these alternative lenders, they'll use maybe their bank account to verify their income. Okay. So you may have a business owner that claims maybe $30,000 a year in taxes for gross income, but he or she might be actually depositing $5,000 a month in their bank account. So if you multiply that by 12, that's $60,000. So we could actually use, 70% of that income to help qualify them. So that brings their income up a lot more versus the typical 30, right?
Interesting. Also wondering, is there ways around the stress test, the B20 mortgage stress test, which makes you have to qualify at a higher rate than the rate you're actually going to pay? Is there a way around that?
There's no way around that, but there are lenders out there that we actually have on our side that don't use the stress test. So there are ways, technically there are ways around there because we do have lenders that will, but most of the lenders do impose a stress test. But, the news did come out late December that the stress test is being reviewed. So there might be a potential change coming up this year. Now, nothing's guaranteed, but talks have come up, and that's a good sign.
Right, okay. That's a good one to know. So we've got the mortgage stress test. You've got alternatives to get if people feel like they've been taken out of the market because of that, because really it takes 20% of your purchasing power away, and that's been difficult for people. We've got the difference between the A mortgages and the B mortgages, and the difference between working with a broker and working with a banker. What other questions do you run into from first-time home buyers or folks that are needing your services?
The biggest questions that I kind of see from a mortgage broker standpoint is a lot of first-time home buyers don't know the benefits available to them, such as the exemption from property transfer tax, which is huge because that could save you almost $8,000.
What's the threshold?
500. So if you buy a property for less than 500,000, you're exempt from paying property transfer tax. And if you buy a property between 500,000 to 525,000, you're partially exempt.
Okay.
So you save some money there as well. So again, on a $500,000 property, your property transfer tax is about $8,000.
So not super applicable in Vancouver, but you get the odd place that'll
you get the odd place, exactly, for sure. And it varies, right? So as a mortgage broker, we actually have access to some monoline lenders as well. So I get a lot of questions from first-time home buyers that say, "What's a monoline lender?"
Yeah.
So they're still financial institutions. The only difference is they're called monoline because they only focus on one business line, which is mortgages. So they don't have RSPs accounts, TFSA accounts, checking or savings accounts. They are online. But that's the main difference with them. And I'll give you an example. So some of these large financial institutions actually have a direct interest in these monoline lenders.
Right.
So they're
the
backed
banks
up.
are invested into those?
Exactly. Exactly. And some monoline lenders you may have heard of. First National is a big one, Home Trust, Street Capital, ICICI Bank, and many others.
Okay. Good stuff. Now, that's really great information for people who are wondering about the mortgage process, trying to find out how much they can qualify for. Getting pre-qualified is very important. Even between the two of us, we've seen me send you people that haven't been pre-qualified enough, and unfortunately the deals have not gone through. So that's an important lesson if you're a realtor watching this. Mortgage broker's not happy when the deal dies either, as you aren't. But what about some of the programs that you have access to through some of these lenders? Is there any new arrival Canada programs that you have that you can speak to? Yeah,
there are the new Canada programs. They're still available. That's where basically you can put 35% down, and you need 12 months of kind of principal and interest payments held in your bank as well. And basically, what the lender is looking for is that you're moving to Canada. How you establish yourself in Canada? So they're basically giving you some leeway, saying, okay, you have 35% down, you have 12 months of principal and interest payments. So that will get you established in Canada, get you a home in Canada. Your 12 months, you're covered. The lender knows to get paid for 12 months.
Yeah.
But they want to focus on their mortgage amount based on, okay, let's say you're an engineer back home. How likely are you, how licensed are you? How likely are you to get a job here in Canada as an engineer?
Right.
What's the income look like? What does the future prospects look like for that position? Right? And if they feel like that, the story makes sense, the income levels are there to support that mortgage amount, they'll qualify you based on that.
Really interesting. Now, for people who aren't familiar, and I'm not sure how relevant this is, but what's the difference between principal and interest?
The difference between principal and interest is basically, let's say your mortgage payment is $1,000 a month. And so there's a certain portion of that mortgage payment will go back to your paying off your principal, and a certain portion of that.
Which is what? What is your principal?
It all depends on the mortgage amount, right?
That's how much money you've borrowed.
Yeah, that's much money you borrowed.
Principal is the amount of money the bank's giving me.
Exactly.
Okay.
So that goes towards that, and then the remainder of it will go towards the interest you're paying.
Of course, yeah. So that's the interest of the bank.
And the more payments you make, so the first payment you're paying the highest amount of interest, and as the payments go on, your interest goes down and your principal goes up.
So important to get a great rate with your mortgage broker, or you end up paying not as much down on the principal, and the loan's going to end up longer. I could tell you my sob story about the motorcycle loan I have at 7%, which is painful. Wow. With really low payments, so I have not much principal getting paid down there. Stupid. Anyway, that's fantastic. I want to get into couple other of the programs. One thing I know people are going to want to know is what's the minimum down I have to put?
The minimum down is always 5%.
So 5% the absolute minimum
On the first $500,000 purchase price.
So
that's key.
What if it's something like what we're sitting in now, which is realistically like a $650,000 condo?
Yeah. Okay. So basically, it's always 5% on the first 500,000.
Okay.
So that's 25,000, and then 10% on the difference between 500,000 and $1 million, and anything above $1 million is 20% down. So you're looking at 650,000, for example. So the first 5% on the first 500,000 is 25,000.
25 grand.
And then you have the difference between 650,000 and 500,000 is 150.
Right.
Right. 10% of that is 15,000.
Right.
Now you add up to 25 and 15. Your total needed is 40,000 for down payment.
So I could realistically buy this property with $40,000 down payment, and now I've got $510,000 left on the mortgage, and maybe correct me on this, but I give people back of the napkin math and say for every 100 grand, it's going to cost you a little less than $500 a month.
That's
Is that about right?
Yeah, that's a good mortgage number.
Given like even the interest have a little bit room to rates can wiggle. It's something like 490.
490 is that's basically what I use too.
Okay.
But that's a good ballpark figure.
So now I've got 25. Let's call it $2,500 a month would be my payment, which would be realistically a little bit more than the rent on this place. And then you have your maintenance fees and your taxes on top of that. So maybe you're looking at $3 grand a month to buy this place on top of the mortgage money.
Exactly. And the payments that you make every month, now they're not all towards going interest. Some of them are going back to your principal as well.
Right.
Right.
And now you're no longer paying someone else's mortgage off. You're building equity.
Exactly.
To take which you can at some point take a line of credit on.
You can leverage it, buy future properties.
Right. That's fantastic, and that's how you just start to build your portfolio and really get that first foot on the property ladder.
And as like I said before, as you make the payments, principal is going higher with rent. Every year, rent is only going higher.
Yeah, that's a great point. That especially with all the tech companies coming in town and immigration is strong. And we're not building enough condos in Vancouver, mostly houses still, and building's really slowed down. So that all makes a lot of sense to me. What if I can't afford a place like this that is fully renovated, right? Up $50,000+ put into this property in the last few months to get it to a place where we could sell it for top dollar. So what if I bought this place 6 months ago when it was all original and we didn't have the traction on it, so it was slow and might have been more open to negotiations on the price at that point.
For sure.
What if I bought it then and I got it for $50,000 less? Is there a program that I could do? Because I mean, it didn't have laundry. Okay. It was kind of beat up. Okay. Given that the person living here at the time had animals, it smelled a bit like a barn. Wow. Okay. And so I like the space. I like the location. I like the layout and everything else. But I have to renovate it, and I don't have the money. Yep. Is there programs that can help me do that?
There's lots of programs out there as well. They're called purchase plus improvement programs.
Purchase and improvement, okay.
Yeah. So basically, you're buying a home that needs a reno, and you may not have the funds on hand to complete that reno, but you could definitely afford it in the mortgage. So what happens is
you can afford it in the mortgage, meaning I can afford those payments.
Yes. So that renovation cost, what happens is gets added into the mortgage amount. So you let the lender know what the purchase price is, and basically how much of a total mortgage you need, including the renovation. What happens is when you're buying the property, the first step is you want the property under your name. So first the property completes and the title transfers under your name. And the money you need for, let's say, a renovation, let's say you need $30,000.
Yeah, you didn't have to do it this nicely.
Exactly. $30,000 is a lot of money. And those funds actually get held back at the lawyer's office. Okay. So what you could do is you could either get a loan from a friend, a family member, or maybe even put the money on your credit card for a short time being, and put that cost on there. So you do the renovation, money's sitting at the lawyer's office. Once the renovation,
whose money is that at the lawyer's office? The bank's money?
The lender's money.
The lender's money. Yeah.
So lender give you enough money to complete on the property, right? And the difference, let's say $30,000, is the holdback. Okay. Basically what the lender is saying is, go to the renovation, Then we're going to send an appraiser out to inspect the property, make sure the renovation's done. And you basically did the rental as per what you told us, and the cost was about what we were giving you.
Right.
And once that's all kind of good to go, then the remainder of the funds gets released to you by the lawyer. And then you use that money to pay off, your family member or your friend. Or,
so I got to go get a bridge loan or something short term to make this renovation happen.
Yep.
I show them that I did it.
Yep.
And then they're going to give me that money back. And the reason for that would be, I would imagine, so I can't take the money and run and not do the renovation.
Exactly. They're giving you that money for that renovation purpose. So they want to make sure you
and go on a trip or something.
Yeah, exactly. And then now your total mortgage amount includes that renovation. So your monthly mortgage amount is actually including the renovation. So I have a lot of clients, actually what they did was they did that, and then let's say they don't want to keep that renovation cost in their mortgage payment, because over time the interest does add up, and a $30,000 rental could cost 40 or 50 or more over 25 years, right? Yeah. So what they did was they just make lump sum payments of that amount. Let's say in 6 months they made $5,000 a month, lump sum back into their mortgage. So in their mind, they actually paid off that renovation cost in 6 months.
Okay.
And now they're living in a new property. And sometimes if you have the right lender, the right mortgage product, you could actually adjust your mortgage payment for the new amount. So if you paid off $30,000 of your mortgage, the new monthly payment would be on that new mortgage amount.
Okay, so that's
increases
like
your
a couple.
cash flow.
That's like $170-$80 that maybe comes off your mortgage payment.
Yeah, exactly.
And
you live in a renovated property.
Yeah.
Your renovation's paid for, so it's a win-win for everyone. And your property value has actually gone up now since the renovation.
Right, and as you can see, renovation makes a huge difference on a property. Really, like, it's the kitchen, it's the bathroom. When those are outdated, you have a harder time selling. If you could just get those two things taken care of. Now, mind you, those are the more expensive ones as well. But even if you can put $1,000 into something. Now, this you generally don't need the mortgage for, but renovation is going to go a long way in your property.
For sure.
That's amazing. I think we've all learned a lot on the difference between a broker and a banker, the difference between different kind of mortgages you can get, the programs like new to Canada programs, purchase plus improvement or purchase and renovate, as I refer to them a little more loosely, programs. Is there anything else we should cover that we haven't delved into? I
think we covered most of the most important questions that are answered or asked. But any questions always come up, don't hesitate to give me a call, email. I'm always available.
How can people get a hold of you, Parm?
The best way to get a hold of me is via cell. So my number is 778-898-9242. If I'm always away, send me a text, leave a voicemail. I'll always make sure I do get back to you ASAP.
And where do we go to follow you on social media?
So on Instagram, it's at Mortgages by Parm, and Facebook as well. I made it easy, Mortgages by Parm, and you'll reach me there as well. And I'm on LinkedIn as well, Parm Rattan. But Instagram and Facebook are my go-to social media channels for all information.
Fantastic. Well, thank you so much for your time, Parm. I appreciate your help this weekend with the open house. It was really nice to have you here to give people that info on what the payments will be, and to come and take some extra time to really share some of the best practices in the mortgage world. So that's going to be it for us. I'm Realtor Josh Kepke. This is Vancouver Real Estate Today, and you have yourself a great week, and we'll see you next time.
Thanks, Josh. Take care, guys.
Vancouver Real Estate Today explores the art of living through genuine storytelling and localized expertise. If you enjoy what we do here, do us a favor and write us a review, and visit us at vancouverrealestatetoday.ca and discover the home that lets you express and live who you are.